This is the last of the tutorials and is just to describe a number of special functions and facilities that the program has to offer. While most of these are documented in the help screens, I would like to take the time to explain them in more detail. The first one that I would like to explain is how the program can be used for a project that involves an option to purchase at a later date. This is a relatively simple task because the program is able to handle this type of transaction just by entering the appropriate data. If we were considering an option contract where we are to pay an option fee, of say $20,000, for a 12-month option to purchase, then we would just enter that as a pre-purchase cost and modify a line to describe the nature of the payment. Then in the timeline section we would simply modify the settlement period on the purchase to be 12 months and add 12 months to all the start month of each task in the project. The program will spread the payment of the pre-purchase costs over the 12-month settlement period. While this may not be correct, the error in the calculation of interest payments will only be minor and have no significant bearing on the outcome of the project. Once this has been done, all other aspects of the way the program is used remain exactly the same as described in the earlier tutorials and examples. The second facility that I would like to demonstrate is how the program can handle a project involving a property that is already owned by the investor. In this case, all of the pre-purchase and purchase costs need to be entered as zero. This is because that information may have been relevant when the property was purchased, but now, perhaps several years after the event, items like stamp duty, for example, may have changed. Once we have entered zero for all of those cost items, then we need to enter the value of the property as it exists in our accounts ledger. We can also enter the value of any loans against the property, and as you can see, I have entered some values just for demonstration purposes. The amounts entered then become the cost base on which the program will determine the profit or loss on the project. Once this has been done, all other aspects of the way the program is used remain exactly the same as described in the earlier tutorials and examples. The next facility is the ability to do projects that are not in Australia. Please bear in mind that a separate program is provided that is specific to investments in America. The first steps are to select the state as other and to set the GST scheme as Scheme A. From this point, all of the costs associated with the project should be entered in the currency of the country where the project is being undertaken. Now, when we go to the financial information section of the data entry sheet, you will see that there are two drop-down lists. The first one is to select the currency used for all the cost items. The second one is to select the currency that is used for all the funding for the project, and they can be the same if that is appropriate. The exchange rates can be set manually or they can be updated from the internet by clicking on the button provided. All other sheets in the program and all the reports will indicate the currency being reported. The next function that I would like to explain is that finance calculations can be based on the end value or total gross sales or gross realization of the new dwellings constructed in the project. When this option is selected, the values entered for the loans on construction are ignored. Any shortfall in funding will be assumed to come from existing lines of credit. When this option is selected, the program assumes that the loan for the initial purchase of the property is taken over at the start of the construction period specified in the timeline plan. Funding required by the investor is then recalculated and all interest costs are then calculated at the rate specified for this type of loan. The program does not assume that any costs other than the purchase price paid by the investor up to this point are repaid to the investor. This facility has little bearing on the financial outcome other than the calculation of interest at a different rate. It does, however, affect the investor's funding requirements and cash flow. The last item that I would like to emphasize is the availability of help screens. Although I covered this as an earlier tutorial, it is worth emphasizing, even if it is for no other benefit than to reduce the number of calls for support. The program allows access to the help screens either by using the Excel menu, or by selecting a cell and pressing the F1 key. In addition to explaining the various sheets and how they are used, the help system also has information on how the program calculates GST. All the error messages are documented. There is a substantial section on how various tasks are performed, and there are also examples of all of the reports. The help information can be searched from the list of contents, a comprehensive index, or a keyword search facility. A substantial number of the calls made for support are requests for information that is contained in the help system or in the documentation supplied, such as the startup instructions. Thank you for taking the time to watch these tutorials. I would also like to take the opportunity to request feedback. The program is a work in progress, and any suggestions that may improve the product and assist the majority of users would be welcomed. Good luck with the program and good luck with your investing.